Let's consider a foundational concept that dictates the very nature of audit work. Today, we are looking at professional skepticism and what it actually obliges you to do. We will approach this precisely, laying out the exact parameters of the job.
We'll start with a fundamental question. How much should an auditor believe what they are told? Logically, the answer cannot be everything. If you believe everything management presents without question, the audit adds nothing of value. It simply becomes a rubber stamp. But the answer cannot be nothing either. If you conduct an audit on the assumption that every answer is a lie and every piece of paper is a forgery, the work would never finish. You'd be trapped in an infinite loop of verifying mundane facts. The profession's answer to navigating between these two impossible extremes has a specific name, and it carries specific, non-negotiable obligations.
Here is our roadmap for today. First, Standard on Auditing 200. Second, what skepticism is not. Third, Obligation 1, contradictory evidence. Fourth, Obligation 2, persuasive evidence. Fifth, Obligation 3, possible fraud. And finally, the practical consequence, which is documentation. Section 1, Standard on Auditing 200.
The foundation of this principle is found in Standard on Auditing 200 on the overall objectives of the independent auditor and the conduct of an audit. This standard explicitly requires that you plan and perform the audit with professional skepticism. It isn't an option, and it isn't a stylistic choice. It is a strict, mandated requirement for conducting an audit properly.
The standard defines this required attitude through three specific tenets. First, a questioning mind. Second, an alertness to conditions of possible misstatement. And third, a critical assessment of audit evidence. You don't just passively receive information, you actively evaluate it.
Section 2. What skepticism is not. We need to clear up a primary misconception right away, because this is where things frequently go wrong in practice. Skepticism is not suspicion. The standard does not require you to assume that management is dishonest. That is a common misunderstanding. But critically, it also requires that you do not assume management is honest either. You presume neither integrity nor its absence.
By completely removing both the assumption of honesty and the assumption of dishonesty, the question of validity remains entirely open, and it is answerable strictly by evidence. As an auditor, you rely solely on the evidentiary record you build rather than any preconceived notions about the people providing the information. Section 3. Obligation 1. Contradictory evidence. The first of the three specific obligations is an alertness to evidence that contradicts other evidence. Consider the reality of the work. Auditing generates a massive amount of information. It is highly comfortable to notice the items that agree with one another because that allows you to close the file and move the work forward. Skepticism, however, is the disciplined practice of noticing the item that does not fit. You must train yourself to treat that contradictory item as the interesting one rather than just an inconvenient one.
Section 4. Obligation 2. Persuasive evidence.
The second obligation dictates that you must not accept less than persuasive evidence simply because you believe management to be honest. Past experience of honesty and integrity does not relieve you of the need to maintain professional skepticism. If a piece of evidence is required to support a balance, you must obtain it, regardless of your personal assessment of their character. A long relationship with a client and a record of past explanations that turned out to be true do not reduce the quantity or quality of evidence the auditor needs. The standard is explicit on this matter. Questions regarding long-standing clients are almost always designed specifically to test your adherence to this exact point.
Section 5. Obligation 3. Possible fraud.
The third obligation is an alertness to conditions that may indicate possible fraud. It's important to understand that professional skepticism is required even in areas of the audit that don't seem obviously related to fraud at all. This alertness must be maintained universally across the entire engagement.
This specific obligation connects directly to Standard on Auditing 240 on the auditor's responsibilities relating to fraud in an audit of financial statements. Skepticism has to remain a constant undercurrent because the risk of fraud is theoretically never zero until it is proven otherwise by hard evidence. Section 6. The practical consequence, documentation. There is a very real physical consequence to this work that deserves stating plainly. Skepticism that leaves no trace in the file is very difficult to demonstrate afterwards. You might have possessed a questioning mind, and you might have critically assessed the evidence internally, but if there is no physical record of that process, you cannot prove it occurred. The working papers are the only proof that your work actually happened. Therefore, you must explicitly record these steps: where you questioned something, where you obtained further evidence based on that question, and how you resolved an inconsistency in the working papers. This documentation is the physical manifestation of professional skepticism.
Professional skepticism is not a mood. It is the refusal to let a plausible explanation take the place of evidence, and it applies most strongly to the clients the auditor trusts most.